Boom shakalaka, what is going on, everybody? Randall here from Crypto Love. Today's episode, we are going to be taking a look at Tradingshot's golden 51-49% ratio, why there's only 600 days left of the bull market, and why, according to this study, it may be in your best interest to just buy a shitload of Bitcoin right now. So if you want to find out more, stay tuned for today's episode. All right, what is going on, everybody? Randall here. Today we're talking about the 51-49% ratio. Now, Tradingshot is one of my favorite analysts on TradingView, and he has this really interesting thing which we're going to take a look at and why it may be in your best interest to buy Bitcoin now. But before we do that, overall Green Day Bitcoin again testing the $10,000 mark, pretty much everything else gaining today. Bitcoin finding resistance again at $10,000 right here. If we were to break through, potentially going up to about 10.4, but since we're breaking down, potentially going to 9.3, which would be the next support. This blue dotted line here, which is the weekly full body candle resistance of the trend since way back when, since the all-time high, that has seemed to be a bit of support and resistance recently. However, I will draw your attention to this. The daily MACD does seem to be turning around here. We're starting to see a tangent to the line. So those are all things to keep an eye out for. Now, what are we talking about today? This is a really interesting chart by Tradingshot. He's taken a look at the past two halvings and the associated bull cycles with them and compared them with where we are right now and where that could potentially put us. So basically, all you need to do is look at this chart right here. So let's go back to the first halving, November of 2012. If we go back 371 days before that, we had the bottom way down here. And 364 days after that, we had the top. Well, guess what? 51% of the time, it was before, 49% after, and that was the first halving. So if that just happened once, chance, okay? But guess what? It happened again in 2016. If we go back from the second halving, June 2016, we go back 532 days, that was the bottom. Go forward for 525 days, that was the top. So a total 100%, 51 before, 49 after. Well, guess what? If we go back 51, if we basically figure out from where the halving is and where the suspected bottom was in December of 2018, if we do that, we can predict not only how long calculate not only how long the first part is, but the 49%, we can actually predict when the top will be. Somewhere around October 4th of 2021 will be the next top. Now, unfortunately, this doesn't exactly predict how high it's going to be. But based on that, we know if it's going to be October 4th of 2021, there's another 600 days left of the bull market. Well, what does that mean for you? Well, I've always been a proponent of dollar cost averaging because it's one of the easiest ways to invest in an investment of an unknown value. You just put in a fixed dollar amount on a regular basis. So let's say you're buying Bitcoin, dollar cost averaging, every month you will put in $100, or every week you will put in $100, or every day you will put in $100, but the fixed dollar amount doesn't change, it's just you're doing it regularly. However, it turns out that there was actually a case study done on this by Daniel Simmering, and what he did was for each day in the past up until 5th of April 2019, and I'm reading from right here, he took a look at if he had invested all his money on that one day versus if he had invested a 12th of that every month for a year. So basically, if it was January 1st, 2017, if he had invested $12,000 on that day or invested $1,000 on that day and that same beginning, the first day every month for the next 12 months. So what he actually got from that was a very interesting graph, which is right here. This is the log version of the graph. And if you take a look at it, the days in red are the days it's actually better to invest a lump sum. Put all your money into it then. The days in green are the days when it's better to invest dollar cost averaging. And if you take a look at it, it turns out that the green days are pretty much just when you're at the top of a cycle or shortly after on its way down. So that happened back here, 2011, also happened 2013, 2014 to 2015, and then 2017 to 2018. So where we are right now, we are in another area where it would be in your best interest to invest a lump sum. Now, I'm not telling you what to do with your money. This is not financial advice. I myself am still dollar cost averaging just because I said it once and I forgot it. Set and forget, the old Ron Popeil method. But if you wanted the best evidence-based strategy for buying Bitcoin, it would be in your best interest to buy a lump sum now, because we know that we have 600 days left in the next until the end of this cycle. So it will put us somewhere down around here. So if you're going to buy a lump sum, you might as well just buy and hold it until we reach October of 2021 or when we find the next bull run. So if you think that is interesting, definitely give a thumbs up to this video. Make sure it's helpful. It helps out the YouTube algorithm, helps the channel. And I hope you got something from that, because I think that's very interesting. I mean, Tradingshot does these amazing graphs, and this is really awesome, the 51-49% rule. So we'll kind of have to see if that sticks. We'll see how accurate he is in October of 2021, see if he nailed it 100%, because hey, could we potentially have $100,000 Bitcoin by then? Yeah, that would be pretty awesome. So thanks for watching, guys. I'll catch you later. Have a good one. Peace.